Usually how they're affected, let's say by a cyclone, is mostly business interruption.
Developing and deploying market-based climate risk insurance products in the Pacific. As you know, the Pacific small island developing states are highly vulnerable to impacts of climate change and extreme weather events.
This is Financial Inclusion Unlocked, an SIJ production.
Hello everybody, my name is Jack Farron, your host, and this is the podcast meeting sector leaders and innovators across the globe to discuss how can we unlock the potential of financial inclusion as an enabler for the SDGs. This is a show produced by SIJ Media, and our first series is sponsored by SCBF. With the frequency and intensity of extreme weather events increasing, small island developing states are bearing the brunt of climate change, facing a growing number of threats, including cyclones, floods, and rising sea levels. For instance, Fiji alone has seen devastating impacts from cyclones like Cyclone Winston in 2016, which the World Bank states caused over $1.4 billion in damage, around 20% of the country's GDP. As countries in small island developing states experience these challenges firsthand, climate risk insurance is emerging as a potential tool to help families and local businesses recover more quickly and build resilience. Today, we're going to learn about PICAP, the Pacific Insurance Climate Adaptation Program, jointly led by UNCDF, UNDP, and the UN University Institute for Environment and Human Security. But first, we hear from Matt Genazzini, Executive Director of the Micro Insurance Network, a global platform for organizations active in the promotion and delivery of inclusive insurance. Matt tells me about the current adoption of these products.
Every year, we collect data from the field to produce what we call the landscape of microinsurance, which essentially is a state of the sector looking at where we're at in terms of the different data points. These include claims, premiums, number of people covered, and other data points. We try and identify the different trends and learnings that we take from the data. In the 2024 landscape of microinsurance, we analysed just under 1,000 microinsurance products from around 290 insurance providers across 37 countries. From the recent data, we've seen an increase from the previous year to around 344 million individuals covered by at least one microinsurance product. However, this represents only around 11.5% of the potential market within the sample that we're talking about. That means there's still over 88% that do not have any sort of insurance to protect themselves against an increasing number of risks.
Before we get to Fiji, a quick mention for our series sponsor, the Swiss Capacity Building Facility. SCBF have supported several initiatives focused on climate risk insurance and parametric insurance across various regions, strengthening resilience among at-risk communities against climate-related shocks. For example, in Colombia, SCBF support helped Blue Marble expand its parametric insurance solutions in partnership with Nespresso from just 4,000 farmers to more than 32,000. The success of this project served as a springboard, enabling Blue Marble to replicate the partnership model in other regions, including Indonesia. In the country, Blue Marble transitioned from conducting feasibility studies to educating and advocating with government ministries, ultimately leading to their partnership with Indonesia, a state-owned insurance company, to scale up insurance for coffee and cocoa farmers nationwide. And in India, they're also supporting Blue Marble in scaling an income protection insurance solution designed to safeguard the livelihoods of at least 21,000 women, informal workers, against the impacts of extreme heat and excess rainfall. Pretty cool, right? Now let's get back to the episode and go to Fiji. So as I mentioned at the start of the show, we're going to learn about the Pacific Insurance Climate Adaptation Program. I met Krishnan Narasimhan, a seasoned inclusive finance practitioner with over 3 decades of domain experience. He is currently the Global Lead Specialist and Program Manager within UNCDF and heads the PICAP program. I asked him how it all started.
The Pacific Insurance and Climate Adaptation Program is a joint initiative of the UN Capital Development Fund, the UN Development Program, and the UN Institute for Environment and Human Security. So this is a joint program that was started in 2021 with the main objective of developing and deploying market-based climate risk insurance products in the Pacific. As you know, the Pacific small island developing states are highly vulnerable to impacts of climate change and extreme weather events. And before the program started in 2021, they had little by way of access to sort of ex-ante or even ex-post risk transfer instruments in the form of, say, parametric insurance. As I said, the main objective is to build the financial preparedness and the ability of people to access quick cash liquidity. And in the last 4 years since the program started, the implementation has already reached 7 countries, and the 8th country, namely Tuvalu, will be added. We have already covered Fiji, Samoa, Solomon Islands, Papua New Guinea, Tonga, Vanuatu, and Kiribati. And our sites are on Tuvalu and probably the Northern Pacific from next year onwards.
Krishnan, you mentioned this is a joint program between UNCDF, UNDP, and UNU EHS. So how did all the partners come together, and which country did you start in?
Yeah, so prior to 2020 or up to 2020, the UNCDF along with the UN Development Program was running a very successful regional financial inclusion program. It was called the Pacific Financial Inclusion Program, right from 2008 until 2020. So by the time that program ended in 2020, we had already built a substantial network of partners in the Pacific, mostly the central banks, fintech and insurtechs, financial service providers, banks, microfinance, mobile money operators, micro pension service providers, etc. And over 45 innovation projects had already been done. And in excess of 2.5 million low-income Pacific Islanders were given access to and usage of appropriate and affordable like financial services, mostly digital financial services. So there was already a very solid foundation laid by UNCDF in that region. And then in 2019, I met colleagues from the UNU, and then we actually started conversations around how UNU's expertise of doing climate risk insurance could be used in the Pacific. And following a multi-country scoping study that was done in 2019 and 2020, the design of this program was then firmed up. And then, of course, we did a round of resource mobilization. Since we were already familiar with many of the major donors in the Pacific, namely the governments of New Zealand and Australia, and it was more or less like a continuation of the financial inclusion program, but with a sharper focus on climate risk insurance, we are now where we are.
Am I right in thinking PICAP was the first program to promote climate risk insurance at the micro level in the Pacific?
Yeah, absolutely. So the climate risk insurance at the sovereign level did exist prior to PICAP. It is through the Pacific Catastrophic Risk Insurance Company, PICRIC. But at the micro and the meso levels, making it available through local institutions, local like insurers, at the last mile, like what PICAP was the forerunner to make it possible in these countries. And as I'm talking to you today, still the PICAP supported initiatives offered by the local institutions.
Krishnan, so to get climate risk insurance off the ground at the micro level, how did UNCDF and partners incentivize local insurers and aggregators to take a lead in developing and distributing these new products for vulnerable populations?
So, Jack, when you want to deliver sustainable climate risk insurance or parametric insurance at the community level or at the household levels, which means that, in very hard to reach populations in remote islands in the Pacific, where you have poor infrastructure, you have to look at digital interfaces to reach the last mile. Plus, you will also have to look at developing the appropriate ecosystem and a network of players that will make this happen. Because as a UN entity, as an implementing organization, we can only be a catalyst or a market builder. So therefore, the first thing that we did was in all these countries was a diagnostic which looked at the supply side and the sort of demand side dynamics and the challenges, the market gaps. Plus, we also did a policy analysis to look at what exists or does not exist to create an enabling environment. So this was done as a precursor to starting implementation. And while this diagnostic is done, we also identified a set of appropriate players, interested players. And when the national stakeholder workshop is done, you can start building these partnerships, bringing the partners together to form what is called the market ecosystem in each country. And once the market players are identified and got interested in developing or co-creating the solutions based on the demand side studies that were done in these countries, then the appropriate UNCDF instruments are used. Of course, it could start with a technical sort of advisory to build the knowledge and the understanding of policymakers, of the private sector, of the aggregator partners like cooperatives. But to start off the projects or to start off the implementation, it is also important that de-risking financial instruments like grants, like concessional loans, or even guarantees are deployed. And that fits in well with the mandate of UNCDF. So this is exactly what we did right from 2021, where we identified ecosystem partners who have now made a very robust market ecosystem. Across the 4 work streams through which this program is implemented.
When you mention of ecosystem partners, of course insurers are going to be there, but what other type of partners are required to reach the last mile?
A typical ecosystem in any market will consist of course, the government or the insurance regulators, which could be the central banks. Then you need the local insurance companies. You also need the external reinsurance companies, which could be a sort of domestic reinsurer or a global reinsurer. Then you need fintech or insurtech partners because, as I said, to reach the last mile, you need a lot of digital interventions. You need payment aggregators like the mobile network operators. You need other financial service providers like the commercial banks or development banks. And you also, importantly, you need the appropriate distribution channel to reach the last mile. In most of the cases, we have built partnerships with distributors or aggregators like agriculture cooperatives or fisheries associations or market vendor associations or the chambers of commerce, as the case may be. It's also important that you have advocacy partners, which include financial literacy service providers, digital literacy service providers, who are part of the ecosystem. You also have in the Pacific, we have partnered with the Pacific Disability Forum, the FemLink Pacific, and other women's organization, because if you want to be very inclusive and leaving no one behind, it is important that we identify vulnerable groups and the organizations that represent these groups and partner with them to reach these vulnerable groups.
So this ecosystem is really quite huge in terms of all of these players. Krishnan, how do you successfully convene them, provide updates, and ensure that everyone is, heading in the same direction?
It is a very daunting and challenging task, and I must compliment the efforts of all our partners and also my team, which has done the sort of nuts and bolts work in actually working with the set of partners. It takes quite a lot of effort in terms of making the partners understand the big difference that they are making to the markets, to the countries that they belong to. Some external support in the form of technical service providers from outside the market is also required, from those who are already familiar with these things in Asia or Africa or elsewhere. We have brought in those experts as is required, but we firmly believe in building the capacities of the local markets, because ultimately for sustainability you need the local capacities to be built, the local institutions to take ownership of what they are doing. I'm very happy to say that in 4 years' time, in a major development project like this, the Reserve Bank of Fiji has taken the lead. They have now taken over the substantive part of implementation in Fiji. They have recently got an Insure Resilience Solutions Fund project going. Happens September last year, where they have set up a separate climate unit within the central bank, staffed and resourced by them, which will take over the national responsibilities. We feel that if this model is successful, we will continue to provide support to this unit. But if we feel that this model is successful, it can be replicated not only in the other Pacific countries, but in other markets where we also plan expansion. And I think I briefly told you about the need for deploying instruments like guarantees and loans, because that is another way in which the financial capacities of local ecosystem partners can be built. In all the countries where local ecosystems have been put together, we have formed a coordination mechanism at the national level, which is usually chaired by the central bank, which has a huge convening power, and or the ministries of finance. And through them, this coordination happens. There are, of course, some challenges in terms of managing the ecosystem, in terms of making each partner understand their role. It's still a work in progress, but we are fairly confident that it will be successful.
I then spoke with one of PICAP's local partners, Tower Insurance Fiji, about how they are rolling out new parametric insurance products on the island. Felicia Whippy-Khan, product owner for Parametric Insurance at the company, explains more.
Tower, in conjunction with the UNCDF PICAP team, initially launched its first parametric insurance product, namely the Cyclone Response Cover, in 2022 in Fiji. This followed by extending to Tonga and Samoa in 2023. Parametric insurance, unlike other general insurance products, are trigger-based on the events, therefore there are no claims assessment involved. Our Cyclone Response Cover offers the community an affordable insurance cover to provide quick financial assistance after a cyclone event to Pacific communities, with the goal of closing the gap in reaching wider Pacific communities that may not be able to access traditional insurance covers. In Fiji, the product under the Cyclone Response Cover offers premiums as low as $32 for a $500 cover. This is a premium that is affordable to the communities and is beneficial in terms of getting them back on their feet. As mentioned, parametric insurance is a trigger-based insurance cover. Therefore, our team have designed the trigger for a payout for the benefits of our community. For example, in Fiji, should a Category 1 cyclone pass through, qualifying wind speed of 119 to 153. For Category 2 cyclone, 154 to 177 kilometers per hour. And if the risk location is less than or equal to 25 kilometers, customers get 20%. That is 20% of their sum insured. So if you're looking at a $500 cover, this equals to customers getting $100 payout based on the sum insured, right? If it's a Category 3 cyclone, so in Fiji, our categories usually range from 3, and the recent ones were 4 and 5. So for Category 4, for example, it's a 70% payout. And for Category 5, if it's a Category 5 cyclone, that's 100% payout. And that's giving customers a lot of financial assistance after an event.
Back to Krishnan from UNCDF.
In any climate risk insurance product or a parametric product, it is important that if there is a payout, then we have to find out how the beneficiaries have used the payout or how they have seen the payout helping them to mitigate the risks that they have faced. So the proof that climate risk insurance or parametric insurance either minimizes or even addresses loss and damage is now gaining a lot of importance and getting a lot of evidence behind it. So in Fiji's case, I must say that over the last 2 years, 2023 and 2024, there have been almost 1,600 different payouts. It could be, some could be to the same beneficiary, but there have been about 1,600 payouts. And more than 85% of these payouts were done digitally through mobile wallets, which also talks about the robustness of the ecosystem, which I mentioned to you earlier, which means that administratively these payouts have been made in real quick time. In the interviews that were conducted either by us or by independent assessors or even by our donors, it has been brought out that these were perhaps the only form of cash support that they ever received, because they were following excess rainfall events which were not categorized as emergency events or which were not categorized as catastrophic events, but still they caused considerable damage at the local level. Now, what is important is that they did not get any support from any other NGO or even through a government scheme, because they were not declared as emergency events. And therefore, the smallholder farmers or market vendors who did suffer losses because they could not do their livelihoods for a few days, or markets were closed for a few days, this was the only sort of relief that they ever got. And many of them have vouched for the benefits that these products have brought them. So many of them have actually used the payout for restarting their business or buying stuff that they lost in the rains. We have testimonials from farmers, from market vendors who have said that they have used the payment for say providing food for their family for a week or 10 days when they had no income, or for say repairs to their house which was damaged through a leaking roof, or to replant their crops which were lost in these rains. Both in 2023 and also 2024, the payouts have been made following excess rainfall or heavy rainfall, and we haven't, touch wood, had a cyclone yet. But we do have an anticipatory action like product which can even pay out 24 to 48 hours prior to the landfall of a cyclone. And from the 4 communities that were covered last year, about 12 communities have been covered in the current year.
So we've just learned from Krishnan all about PICAP, but I wanted to delve a bit deeper into its impact and evaluations that have been completed. Sinja Bori leads the Climate Risk Finance Solutions team at the Munich Climate Insurance Initiative, MCII, the division at the UN University Institute for Environment and Human Security that works on climate risk finance and insurance. Sinja and her team have been leading the evidence generation and research on PICAP. I spoke to her to learn more.
2 years ago, we did a study together with the University of South Pacific in Fiji to look at the communities, their risk perceptions, what climate risks they're exposed to, how they're currently dealing with the effects, and their interest in disaster risk financing solutions. And then now, 2 years later, just at the end of last year, we did a study together with the Ministry of Agriculture and Waterways in Fiji to then look how the first impacts that have been paid out in Fiji are actually used and what impact they had. So what we found 2 years ago, and we interviewed farmers and fisherfolk, the climate risks that they're most exposed to are cyclones, heavy rain, drought as well. And often they didn't have any access to coping mechanisms. So they had to rely on their savings. Usually it takes, after 3 months, their savings in a case of loss of income would be used up. So there was really a need to look at other support, and insurance provides them such a solution. So now, talking to farmers that part of them had access to insurance and had a product for 2-3 years and have received several payouts, we see they're satisfied with the product. It doesn't cover all of the damages that they have, but at least it helps them It helps them cope with it. How they're affected, let's say, by a cyclone is mostly business interruption, right? And then the second most mentioned effect is also lack of access to food and water supplies, or having to buy food and water supplies. And only then, in the third point, damage to property is mentioned. But the most point is really business interruption. And now, talking to people that have received payouts on how they have used them, those are the points that are mentioned, right? So first of all, it's the immediate effects after a cyclone, for example, hits, that they buy water and food, that they buy new inputs for farming, and then start recovering and reinvesting.
Sinja, what are the key learnings that you are now taking forward as the project scales into new markets?
It takes an ecosystem to build the market for climate risk insurance, and it takes an ecosystem of public and private actors. So really for everyone to work together, be it the insurance providers directly, but then also the government, the ministries that know where the vulnerable communities are, that provide the regulatory framework that can help sort of also address affordability concerns. Other private sector actors as well. So, for example, how do the insurance payouts reach the people? So it's using, for example, mobile money, working together with mobile network operators. That's one point, that it's not only about developing a product, but then really looking at the ecosystem of how it reaches the communities want to reach. And that's the second point. I think a big lesson learned is to implement successfully a solution like that. It's not only the features of the product that count for success, but that outreach part and the distribution. So we have a product in the market. We want to make it accessible for the most vulnerable communities. Where are they? Do they know about the product? Who would actually explain it? And we want to reduce the price, of course, of solutions, because affordability concerns are always sort of a challenge. But going to remote villages and doing awareness raising campaigns with individuals is also very expensive. So a big lesson there is also the importance of working with aggregator partners, such as cooperatives, different associations and NGOs that can help as an intermediary then to distribute the product. We are, of course, constantly assessing the lessons learned that we have from PICAP as well. The big questions now that first products are in the market are how do we scale up, and how do we scale up sustainably, and basically so that products can be offered sustainably to the most vulnerable communities. So that scaling up part, I think, is a big question, not only in the Pacific, but in other geographies as well. As we're expanding together with UNCDF and also with UNDR to Africa, to Caribbean, to other countries in Asia. In some of those countries, solutions are already in place, but now the big question is really how do we scale them up? Another point is also to continue looking at the impact in many very ways. Measuring resilience is difficult, is a difficult feat in itself. So what other aspects, how do we define resilience? Can we measure it, and how can we confirm sort of the impact?
Wow, I enjoyed that. I hope you did too. This was Series 1, Episode 2 of the Financial Inclusion Unlocked podcast produced by SIJ. Don't miss the rest of this series as we dive deeper into unlocking the potential of financial inclusion. Be sure to subscribe and follow us on your favourite podcast platform so you never miss an episode when they come out. Shout out to SCBF for sponsoring our first series. You can learn more about how they are innovating inclusive finance and how you or your organisation can support their work to fund more transformative projects at www.scbf.ch.